Well, with that, we'll move on to our next management conversation, and the focus is now on Polycab. Now, the first quarter was actually a miss for the company on all fronts. EBITDA margins were under pressure due to a change in the business mix. The cables and wireless segment saw some good revenue growth, though. So let's talk about the outlook going ahead. We've got Inder T Jaisinghani, Chairman and MD of Polycab, with us, as well as Gandharv Tongia, ED and CFO of Polycab. Gentlemen, thanks very much for joining in. Mr. Jaisinghani, if I could, come to you for the overall picture, because, I mean, if you look at the first quarter, the year is not off to the good start, because there was a miss in terms of the top line, the margins. I mean, I'm talking about analyst expectations over here. So can you tell us what the environment is like for the cables and wireless business, as well as your FMEG business, where the good news is that the losses seem to be reducing and, things are looking better?
FMEG now it is growing because we are increasing our network, and already we are bringing with the new varieties and capturing right market. But it will take further time. But we are at least at par now, and we are coming to this year in the profit, and it is going to grow continuously at 20-25%.
That's FMEG, sir. So 20-25% growth on your FMEG business. Profits this year will turn profitable. We got that. Just, start with the headline on the basic business, cables and wires. What's happening there?
Cable and wire business also is good, but because of today, depending upon because of volatility of the market, and all dealers are distributors are trying to reduce their stock, but overall demand is good from both the point of view, dealer network and the infrastructure. There is a good demand, and I think so continuously it is going to grow. There is no short of any demand.
Okay. All right. Good morning, gentlemen, and good to see you. When the last reported market share that I have is around 25% in the wires and cables business. And it appears, in comparison to the other listed peer, you have grown faster. So have you gained market share in the first quarter?
Yeah, we are. Gandharv.
Yeah. Thank you, Inder bhai. It will be difficult to make that statement at this stage because the other listed companies have not yet published their numbers. But it seems that we are continuing with our growth trajectory, and this year also will probably end up having some gain in market share.
Okay, good on that. Just one more quick point before we get into the nitty-gritties is that normally you'll mention that Project Leap, which had that target of around 20,000 crores odd. But I think in yesterday's presentation, it was missing. Are you coming out with a fresh guidance? 20,000 crores in this year, and 2026, it looks even better. Before your analyst call, I wanted to know about that because that was a notable miss yesterday.
Yeah, you are perfect in your detailing. You're right. So in 2021, we embarked on this particular project. This is a transformation project, and its name is Project Leap. BCG, or Boston Consulting Group, is helping us on this project. And under this project, we wanted to attain a top line of 200 billion or 20,000 crore rupees by fiscal 26. And as you know, in the last year, fiscal 24, we had achieved almost 18,000 crore rupees of top line. So in the current fiscal, we'll recalibrate our guidance because 20,000 crore rupees we should be able to achieve sooner than FY26. And between second quarter and third quarter, we should be able to come out with the revised guidance.
Okay, but 20,000 crores looks like maybe you'll get to it in this year. Don't you think it's possible?
I think what we can certainly do is we will continue to grow at a rate which is going to be better than the industry growth rate. And if that happens, it's quite possible that we are able to achieve 20,000 crore rupees top line before the FY26 deadline.
Okay. And what about margins, Gandharv? The dip that we've seen this quarter, I'm just going back to the headline margin number. So you're at 12.4 versus 14%, 14.1% last year. Now, is this a temporary blip? How do you make up for it? And how does the rest of the year look?
You're right. In fact, last year we had a dream run. We had almost 30 to 40% volume growth. The top line grew from 14,000 crore rupees to 18,000 crore rupees. Even the EBITDA as well as PAT margin expanded. The PAT margin was almost 10%. Against that great performance, even the current year, we have started with a positive growth. The top line grew by almost 21%. This is again the best ever first quarter performance of the company. And as you rightly noticed in your opening remarks, there is a change in the mix. The EPC business, which used to contribute almost 3% to our top line, in this particular quarter has registered growth of 292% and contributed almost 10% to our top line. Historically, EPC business is a less margin business than our cable and wire business, and that is why the blended margin has contracted to 12.4%. The other two reasons why there is contraction is the exports business registered a bit of a degrowth, and exports margin is comparatively better profit business than our domestic business. And the third is the channel business registered a bit of a degrowth in the month of June, and the institutional business in domestic market registered a very solid growth. So because of these changes, there was a mix at the company level, and that is where the contraction was noticed. In general, we are comfortable having a EBITDA guidance of 12 to 14%, and this quarter also it was within that particular range. We believe that in the quarters to come, we should be able to maintain and improve on EBITDA margins.
No, but 12 to 14% is still a band, and I'm trying to understand whether, realistically speaking, whether you will be at the lower end of that band because of all the factors you mentioned. It's not just one factor. Mix is just one issue. Lower exports and the channel issue that you spoke of. So how many, out of these three issues, which ones do you think will start reversing, whether the cables and wireless growth comes back enough to ensure that you remain closer to 14%, the top end of that margin guidance band?
So as far as the domestic cable and wire business is concerned, it is dependent on volatility in copper prices. In this particular quarter, there was a fair amount of volatility. Copper moved from close to $9,000 to almost close to $11,000. And yesterday it was hovering around 9,300, 9,400 levels. So if that volatility continues, it might have some impact on the immediate term basis. But if we were to take a mid-term view, we believe that we will continue to grow at a rate which is going to be better than the industry growth rate. And in that case, we should be able to operate at the higher end of the EBITDA margin guidance of 12 to 14%.
Okay, all right. So you're maintaining that. And just to reconfirm, if you have to revise your guidance, it will be done in the second half of this fiscal, right? Quarter 3, quarter 4, if in case you want to revise it.
Yeah, we will certainly revise the guidance and we'll try to do it at the early, but safer to assume that we should be able to do it in the second half for sure.
Mathematically, that guidance actually is not very material right now, just mathematically, but you all know how business is trending on ground, so you'll be the best judge on that front. But you mentioned the international business, which has degrown more than 25%. And I think the contribution has come down to around 5.5–6% odd. Earlier, you all had guided that, say, by the end of this year, it moves to around 10 to 12%. Do you maintain that guidance that things recover from here on? And by the end of this year, we'll still have 10% of your total revenues coming in from the international business?
You're right. Our guidance till fiscal 26 is to have 10% exports contribution to the company's top line.
Yes.
You are right that in this particular quarter, there was slowness and sluggishness, which was noticed. This was predominantly coming from a particular geography. Outside that geography, other geography has registered growth. And we believe that in quarters to come, we should be able to move towards 10% guidance.
So you believe that things will recover then from here on, right?
You're right.
Okay, all right. Any update with regard to the conversations you all were having with the tax authorities? That was a bit of a blip that you all saw late in December, but the market seemed to be in that sort of a mood that they bought that dip and the stock price is much higher. Stock price aside, have you heard from the tax authorities?
So we have not received any demand or any notice from the income tax department, alleging what was stated in the PIB release. We are in discussion with the income tax department. We have been told that this is a time-consuming process, and as and when we receive any notice or any further communication, we will continue to notify the stock exchanges as we have done over the last several months.
Any timeline indicated?
This is a government-led initiative, and there are timelines under the Income Tax Act. I've been told that in general, they should be able to wrap up such exercise within the 12 months of the end of the fiscal in which the search was conducted. That means that by March of 25, in general, the department should be able to conclude. But these are government timelines and they are dependent on several ifs and buts.
No, but it's still helpful and appreciate you being candid about it. It just gives investors an idea about sort of what time frame to work with, because this is still an open issue. There is no statement from the tax department saying that there is absolutely no demand. So it's still sort of lying open. Just to talk about, some final issues, let's get back to Mr. Jaisinghani as well. Sir, you were in the midst of a big capex rollout plan. What are the capacity utilization levels right now? How much more capacity would you be adding? And in terms of top-line growth, what is the further impetus we can expect with this capex coming on stream in FY25 and FY26?
Basically, today we are capacity utilization around about 70 to 72%, and continuous demand is there, and a lot of variety we are adding in our cable line. Special cables, we are coming with the EHV cables, we are coming with the which is required in the electricity board, MECG cable, aerial bunch cable. So a lot of new variety also we are going to make it. So we are continuous putting in a capex, which is going to be give us at least 20-30% more coming time our revenue, and with the good reasonable profits.
Okay, all right. Final question then, Mr. Jaisinghani, before we let you go. The promoter holding, a couple of years or so ago was around 68.5%. It's come down a little sub that 65% because of that small stake sale that we saw in the month of June. What's the plan? I mean, you're still very much in control of the company, but since the stock price has moved and you would have worked very, very hard to build the company, do you believe that you could sell a couple of more percent, given that demand is so strong for your stock, and you could take some money off the table?
No, we are sometime require in a family something which is the family has to decide. So we had decided whenever we see that the right time in coming 3-4 years, we are doing sometime in 1-3-4 years. But that we are together thinking very clearly that what we have to do, what required for our family. That's all.
Okay. So it was a family requirement. That's why you sold that 2% odd. But is there a plan that there could be some further requirement where you could bring your stake down by a couple of more percent, say to around 60% or thereabouts? Could that be a part of the plan?
No, that is not in our mind at all.
So as of now, no more stake sale from the promoter.
Okay, we got that. That's a no that we have noted and registered. Got it, Mr. Jaisinghani as well as Gandharv. Thank you very much for joining in and taking questions today. So that's Polycab with how they're viewing the business going forward, saying that the FMEG business will be profitable this year. It already, at the EBITDA level, it's already looking better in the first quarter, and they're expecting to hold margins towards the higher of that band of 12 to 14%. 20,000 crores in revenue is the target for the current year as well. Stock is doing well.